Okay, chapter number 3 is the one which is very important, PGBP, profits and gains from business and profession. As you know, both at CA Inter and CA Final also, it gets you a lot of marks. Let's try and make a revision video and let's understand it to the best of what we already know and let's build on it. Business and profession, is there a difference? Yes, there is a difference, but honestly, it does not matter except for presumptive tax, where for business there is section 44AD and for profession there is section 44ADA. Next, profits or income, section 28. It's very easy to identify incomes under PGBP, but there are some special incomes which will always go under PGBP. First is general incomes. For Yeshas Academy, the sales to students. For McDonald's, the sales of food. For Netflix, the sale of subscriptions are general incomes, but there are some specific incomes. Example, for association like ICI, their incomes. Any non-compete fees that you get. Any export benefits that you sell and you make money. Any partners getting salary will not go under salary, will come here. Any partners getting interest will not go to IFOS, it will come here. And if you basically convert your stock into an asset, example, the jewelry in my showroom, I take it to my house, I convert that stock into asset, that conversion will also be taxed under PGBP. There are some specific incomes. Also, any gifts in relation to business and profession, not more than 50,000, any gift, any amount will be taxed under PGBP. There are 3 types of businesses. One is called speculative, one is called non-speculative, one is called specified business. Specified business, there's a list we'll discuss ahead. You already know the list, but we'll talk about it ahead. The speculative business is when you buy and sell without taking delivery, and the non-speculative is like normal business, like a Netflix, like a McDonald's, like a Domino's, like a Yeshas Academy. Now, let's only think about one thing, which is derivatives, futures, options, etc. Anyone who trades in futures, options, etc., that income or that loss will be considered as normal, that is non-speculative business. So shortcut is derivatives are normal. Guys, remember, why are we learning this difference? Because in losses, some losses cannot be carried forward for 8 years, some will be carried forward for 4 years, etc. Next, method of accounting. In PGBP and IFOS, both the heads of income, you can choose your method of accounting. Cash, you want cash? No problem. You want accrual? No problem. You can choose. I'll tell you the little difference and through a shortcut. Accrual system, you follow the year. Example, if this year's rent I have paid and next year's also I have paid, I will not get deduction for next year because it's on yearly basis. It is basically follow the year, that is accrual. Even if you've paid, not paid, doesn't matter. You have to see the year and take the expense or the income. On the other hand, cash system of accounting, if I paid rent of this year and 3 months rent of next year, I will get a deduction this year because in cash system you follow cash. Next, very, very important, there are 10 ICDSs, income computation and disclosure standards. First, what are these? The government has said, listen, everyone, don't do calculation differently. So for some specific items, we are giving out a list and you have to calculate your profits and gains based on this list. These are called ICDSs. There are 10 of them. And a very boring accountant forever gave some, very confused and rude accountant forever gave some boring provision. That's a shortcut. Here it is. A very confused and rude accountant forever gave some boring provision. Let's see the first one. The first one is accounting policies. Guys, if it's an accounting policy, then we don't look at materiality, etc. Even if it's 10 rupees of income, we will account it. So they don't look at materiality and prudence in case of tax. Guys, by the way, these ICDSs are only to calculate your income and tax and not to make your books of accounts. For them, we already have accounting standards. Next, valuation of inventories. As a businessman, do you have inventories? That means, do you have stock? How will you value it? At cost or net realizable value, whichever is low. You already know what is inventory, and any asset, it can be work in progress, it can be raw material, all these are considered as inventory. Next, construction contracts. Guys, you are someone who's into construction contracts. Example, you build bridges. Just let's take an example. It's a company which builds bridges. Now, how do you account for those construction contract? First, you take the percentage of completion method. How much percentage complete, that much revenue you can book. But if you don't know percentage of completion method, then you can look at a straight line method if you don't know at what stage. And if both are not known, if it's a very small contract, then you can look at completion of contract method. That means you will account for the revenue only when the contract is completed finally. So these are the different cases. This is the next ICDS. Next one is revenue recognition. When do you recognize revenue? In case of sale of goods, whenever there is a reasonable certainty that you'll get the money back, that is sale of goods and that is revenue recognition. In case of rendering of services, again, you look at percentage of completion method. If that's not possible, then straight line method. If that's not possible and the contract is only up to 90 days, that means the service you're providing is only up to 90 days, then let it complete and then account for the revenue. This is revenue recognition. Next, tangible fixed assets. You're buying a fixed assets for your office, for your business, great. All the costs associated, you add it and then you recognize the tangible fixed assets, including the interest cost. Yes, including the interest cost. Next, effect of change in foreign exchange rates. Now, guys, you right now know dollar value has changed. Your uncle used to get the iPhone to India, and that time the value of dollar used to be 70 rupees. Now the value of dollar is about 90 rupees. So what happens in case of business? How do you account for these changes in foreign exchange rates? If it's a monetary item, example, if it's an item which you need to still pay for, then you have to account for at the end of the year. Example, when you bought it or when you took that loan, it is 80 and now it is 90, so 10 rupees you have to account for it. But if it's a non-monetary item, then you don't have to account for it. So non-monetary item basically are like stock, etc., which is already bought, so you don't have to account for it. Next, government grants, important. Guys, you are someone who's got a grant from the government. Congratulations. How do you account for the grant? Example, let's say you're doing some good work in the field of pharmaceuticals and the government gives you a grant of 1 crore rupees. When do you recognize it? Whenever there is reasonable certainty that you will realize that money. And ultimately, if you've realized it, then you cannot delay the accounting of it or the taxation of it. Next, securities. You are someone like a bank, etc. You hold a lot of securities like shares, bonds, etc. How do you account for it? You basically do again cost or NRV, whichever is higher. Sorry, whichever is lower. Now I'll give you an example here. Cost or NRV, whichever is lower. Here we go. I'll just give you an example with numbers. So let's take the example. Let's say you have Reliance shares, you have Infosys shares, etc. So you'll total up all the shares together, their cost, the NRV, whichever is lower. This is what you will record it at. Same way with bonds. So you'll not do it per share. You'll do it per category. Next, borrowing cost. You take loans. There is interest that you pay. That's of course called borrowing cost. If it's related to your business, then it will be going to P&L account. If it's related to an asset, then it will go to the balance sheet. Provisions, contingent liabilities and contingent assets. Here with me, in Income Tax Act, you cannot recognize provisions unless there is a reasonable certainty that it will happen. Then it is an actual liability, it's not a provision. Contingent liability is also same way. You cannot recognize contingent liability unless there's a reasonable surety that has going to happen. And contingent asset, that means you're going to get some money. Again, there it becomes reasonably certain that you're going to get the money, so you have to recognize it and pay the tax accordingly. ICDS are not meant for maintenance of books of accounts. It is meant for basically paying your taxes. ICDS is applied to everyone, but it will also apply to people who pay MAT, but not to people who pay AMT. Next, this is computation of PGBP. These are the 10 ICDSs. Remember the shortcut and remember these 10 ICDSs. Perfect. We now move to deductions. Guys, deductions under PGBP, you don't need to by heart. Just remember that any expense connected to your business and profession, you can minus. So if there's any expense which you feel is connected to business and profession, you minus it. Example, my high electricity, rent, salary, admin expense, printing expense, all these expenses you can minus from your PGBP. Don't look at the sections right now, just focus on the concept. In section 30, they are basically saying that you have paid some for office buildings, you paid some amount, allowed as a deduction, yes. Next, for plant and machinery, furniture, yes, allowed as a deduction, but the expense should be revenue expense. It should not be capital expense. Example, if I paint my office, can I take it as a deduction? Yes. But if I add another floor to my office, then that is a capital expense that will go to the balance sheet and you will only get depreciation. That's the next point. Section 32 is depreciation. First of all, for depreciation, it should be a business asset, not personal asset. So my car, business car, I can take depreciation, but my personal car, I can't take depreciation. Next, it should be owned by you and it should be put to use. Yes, it's not about ownership, it is put to use. That's the word, shortcut is OP. Now, depreciation, can I take it as random rates? No, you'll have to take a specific rates. All the assets are bifurcated into 4 categories. First, land and building, depreciated at the rate of 10%. Plant and machinery, depreciated at the rate of 15%. Furniture, 10%. Intangible assets, 25%. There are some more rates to it. Example, plant and machinery, if it's a motor car, 15%. But if it's a EV, 40%. If it's any pollution control equipment, etc., then again 40%. Books, computers, which change very fast, 40%. If it's an aircraft, 40%. Remember these rates, you can look at the ICI material or your books for detailed description, or you can look at here also for these rates. Now, if the asset is put to use up to 3rd October in the year, that means it has been put to use for more than 180 days. So you can take full year's depreciation. Yes. So remember the date is 3rd October, put to use. If the asset is put to use after 3rd October, then you will only get half year's depreciation this year. Next year, you can take full depreciation. Also, if you're doing some SAM, sale, amalgamation, merger, reorganization, then in that case, you will basically have to bifurcate this depreciation between the old entity and the new entity based on number of days of usage. All right, depreciation can be calculated as per SLM method also and WDV also. But in WDV, there are advantages. I'll tell you what. First of all, SLM method is only for power companies. So if you're a McDonald's, you cannot take SLM. You have to take WDV. In WDV, you gather all the assets together. Example, for Infosys, all the laptops will be together in one group. That's called basically block of asset. Same type of asset, same rate. All the laptops are plant and machinery. They're taxed at a depreciated 40%. So bring them together. That's the opening balance. Plus any new laptops purchased, that will be added. Any sold, that will be minus. You will not calculate any profit or loss on sale, and on the final amount you will calculate depreciation. That is how you calculate in block of asset method. This is called family method in my shortcut, and this is WDV. On the other hand, if you're a power company, you have an option to take SLM, or you can still go back to WDV. But if you choose SLM, then you have to focus on individual assets. You will depreciate individual asset, and when that asset is sold, it will either lead to a profit, which is called balancing charge, or a loss, which is called terminal depreciation. Remember, SLM is not important. WDV is where the marks lie. Next, if you are someone who's into PM, power and manufacturing includes printing of books as well. If you're someone into that, and if you have any new plant and machinery, again PM, then you will get additional depreciation, congratulations, of 20%. But if it's after 3rd October, then this year 10%, next year 10%. Guys, remember, plant and machinery except ships and aircrafts you won't get, except second hand you won't get, office appliances you won't get, and motor vehicles you will not get additional depreciation. Next, oil exploration and production companies. Now, what happens in oil exploration and production companies, I'll tell you. See, first of all, where does oil come from? Oil comes from underground, especially seabed. Now, the government says that, listen, on this area in the seabed, there is oil. Reliance says, I will dig into it and I will remove the oil and I will give it to you guys. Now, they have a production sharing agreement between Reliance and the government. I'm just taking Reliance an example. They have a production sharing agreement where the Reliance says that, listen, I'll remove oil, I'll keep selling oil, I'll recover my cost, and the profits we will split. Now, in that case, does that amount that you pay for participating interest, PI is called participating interest, basically you have to purchase the participating interest, and I also want to participate in this oil rig. That amount that you pay is considered as an asset. Yes, it is a fixed asset, and you will amortize it over the number of years that you will dig the oil rig. This is something that people find very confusing, but it's very simple. This participating interest, which is paid by Reliance example, that is a capital asset, will go to the balance sheet and you can take depreciation. Actual cost of asset. You buy an asset for 1 crore, you pay some transportation, installation charges, you will add all of that. That is called actual cost of asset. But there are some explanations under section 43, because you don't need to necessarily, or you don't want to necessarily hike up the price just to get additional depreciation. So here it is. They say that in case of scientific research asset, the value will be considered as 0. If I have already used an asset, I have sold it to someone and I'm rebuying it at a high price, the government won't allow that. They say that in case of repurchase, it will be the original price which you are purchasing at, or whenever you transport whatever the WDV, whichever is lower, will be considered as an actual cost. In some cases, this is called U-turn. I'm giving it and taking it back. Or if someone has used it, given it to me, and then taking it back, that's called reverse U-turn. Again, in that case, guys, the depreciable value or the selling price, whichever is lower. Next, if I have a personal asset example, if I have a laptop, which was as a student my laptop, and then I converted into a business asset, then in that case also, you can take the original cost, except for building, where you have to take notional depreciation. Transfer of an asset by a holding company to its subsidiary, by a subsidiary to its holding company, by an amalgamating company to the amalgamated company, all of this will be at the cost to the previous company. Next, any subsidy that you refer from the government, minus it. Any interest cost, you have to add it. Any asset acquired and used abroad and brought to India will be considered at the original cost, less notional depreciation. These all are basically ideas. Section 32.2 says that if depreciation is not enough to cover this year's profits, then the excess depreciation, you can carry it forward to the next year. And remember, the asset can be also partly used for business and partly used for personal purpose. So the additional, you have to bifurcate the depreciation in that case. Example, my car is used for business also, for personal also. So remove the percentage and do the bifurcation. Next, 33AB. Guys, this is a very small concept, Tea, Coffee and Rubber Development Board. Now, tea, coffee and rubber, to regulate the business, the government has made a board and the government has given you some deductions. Here is what the deduction is. First of all, calculate your profit. Then 40% of those profits, example, you are into tea, coffee manufacturing and your profit is 1 crore rupees, 40% of that is 40 lakh rupees. Or the deposit you made to this coffee board, you have a special account there, you have to deposit some money. Whatever is a lower amount, you will get as a deduction. So this is 40 and what you deposit, maximum is 40, of course. If you have to deposit that money within 6 months from the end of the year, within return filing due date, you need to deposit the amount. Example, my 40% is 40 lakh. I deposited 32 lakh, so I'll get a deduction. This is an advance benefit. The government says, listen, this money you can use later on, no problem, but today only I'll give you a deduction. Now, in this case, audit is compulsory. Someone needs to check you and that money has to be withdrawn. And when you withdraw it, it has to be used for particular purposes. Example, if I withdraw it and don't use it, it'll be taxed again. If I withdraw it and use it for other than the purpose specified, again I'll be taxed. But if I withdraw it and I use it for the right purposes, then again I will not get a deduction because I've already got a deduction. And if the asset which I buy, example, there's money, there's 40 lakh rupees which I put into a separate account, I remove it and buy an asset, and that asset should not be sold within a period of 8 years. That's the concept. All right, same with this is site restoration fund. What happens here is that they are businesses which are involved in extracting minerals, etc., from the ground. So they have to dig up the site and then they have to restore it. So for that, you basically calculate your profit, then take 20% of that and deposit that in a separate fund. The government gives you an advance deduction, and then that money can be used later on. Same like 33AB, there is 33ABA. Both of them are given to different businesses, but the logic, the idea, the audit, etc., is similar. The conditions are also similar. Like scientific research, you are basically doing scientific research in-house, example, developing some new pharmaceutical product, etc. The government says we'll give you two benefits. You are special. First benefit, any capital asset that you purchase for that scientific research will give you 100% deduction, but don't sell it. Whenever you sell it, we'll reverse that benefit. Example, if you buy an asset for 10 lakh, you'll get a 100% reduction of 10 lakh, but if you sell it ahead at 7 lakh, that 7 lakh will be reversed in PGBP. If you sell it for 12 lakh, then 10 lakh will be reversed under PGBP, 2 lakh will go under capital gain. This is the logic. And also, for the last 3 years before starting the business, if you've done some research and you want to take that expense, even before starting the business, you can take for 3 years for raw material and salaries. But if I don't, this is for in-house, but if I can't do scientific research in-house, can I do it outside? That means, can I donate money to outsiders? Yes, you can donate money to Scientific Research Association. Obviously, they should be registered when you donate. After that registration goes away, that's not your problem. You can donate to Indian companies whose main objective is scientific research. You can donate it to IITs, USINs, basically universities, specified bodies, IITs, national laboratories, and such other persons you can donate to and get the deduction under scientific research. Next, same thing, if you donate for biotechnology also, you can get the deduction here. Next is telecom spectrum. Guys, Airtel, Jio, Vodafone, etc. are into the business of telecom, and for them, there's a certain deduction which is 35 ABA. Airtel bought airwaves, and ABB, Airtel bought bandwidth. Now, what is this? Let's first understand. If you understand the first one, you'll also get the second one. Overall logic, I'll tell you, guys, these guys have to pay for two things. One is they have to buy a license, and then they have to pay for spectrum fees. Both these are amortized, that means taken to the balance sheet, and then you are depreciating them or amortizing them over the number of years. First, let's talk about spectrum fees. Whatever for the spectrum amount you pay, that will be taken to the balance sheet, and from the year you start your operations over the useful life, example, if the spectrum you paid 100 crore rupees for and is valid for 10 years, then every year you can minus 10 crore rupees. That is what they are trying to say. And if, let's say, you pay later, example, you start your operation this year but you pay next year, then your deduction or depreciation or amortization will start from next year. So whenever you start business or whenever you start payment, whichever is later. And in the meanwhile, example, after 4 years, that is minusing 40 crore, you bought the spectrum for 100 crores, you minus 40 crores, so balance is 60 crores. Now you're selling the spectrum. Same concept here, like assets, when you're selling it, if you sell the entire spectrum for 62 crores, or 2 crores will be a profit. If you sell it for 55 crores, a 5 crore will be a loss if you sell the entire spectrum. What if you sell part of the spectrum? Then same like block of asset, you'll minus it. Example, from the 60 crore, if I sell, so let's say, part of the spectrum for 10 crores, so you minus 10 crore, and then the next 50 crore you'll get amortization on. So this is the same thing for license also. Your only thing difference is here you're buying a license, here you're paying for spectrum fees. Next, 35AD, Apna Desh, basically specified businesses. Here you're starting some businesses for the benefit, and here they say that if you start some specified business like hospital, like warehouse for agriculture, like infrastructure development, etc., then they are giving you certain benefits. Main benefit is that any capital asset bought for this specified business, you get 100% deduction. You don't have to wait for depreciation. Logic is the same. You can't sell it for 8 years. If you sell it for 8 years, they will reverse the amount. After 8 years, no problem. And you have to go for an audit. Specified business losses can be set off only against other specified business profits. You will see that in set off chapter. And the plant and machinery that you're buying should be new. 20% second hand is okay, but if you buy more than that 20% second hand, then on that you will not get 100% deduction, you will only get depreciation. All right, this is 35 CCA, corner area. Basically, in India's rural development, if you spend money for India's rural development, or if you donate money for rural development fund and national poverty alleviation fund, you will get a deduction. 35 CCC, crops. If you donate for notified agricultural extension projects, then you will get a deduction here under section 35 CCC, but here the minimum expenditure has to be 25 lakhs, but no deduction for purchase of land and building here. 35 CCD, if you're spending money on skill development, example, you started a school where, or a college where you train people on how to make food or how to do carpentry. On skill development, if you spend money, you will get a deduction, even if it's not connected to your business. Yes. Next, 35D. Guys, you are basically doing some preliminary expense, that is before starting the business. If you do any preliminary expense like market research, if you do get a company registered, all those expenses will be totaled up, and that will be given to you as a deduction in 5 parts as a pastry, not as a cake. That is a shortcut. Now there are some conditions. First, this preliminary expense should be revenue expense. Okay, then second, it should be up to certain limits. And third, if there are certain expenses like project frame, project report, feasibility study, engineering study, and market survey, project frame is a shortcut, then these expenses will be given to you as a deduction only if it's from approved source. That means if your friend should not be doing this, this should be done by EY, PwC approved sources, or it should be done in-house. Next, there is a limit of this preliminary expense. What is the limit? The limit is 5% of your cost of the project. So if your new project, you're developing a new business and the cost of the project is 1 crore rupees, then 5% is 5 lakh rupees. Only up to that preliminary expense will be allowed as a deduction. What if a preliminary expense is 7 lakh rupees? Sorry, we'll give deduction only up to 5 lakh. And if you're a company, then 5% of capital employed or this amount, whichever is higher, can be taken as a limit. Next, certified DD demerger done. If you're doing any amalgamation, demerger, etc., and you have any expenses in relation to that, again, you will get a deduction, but in 5 parts. Next, don't do anything certified DDA. Not talking to you, do of course the revision lectures, but don't do anything certified DDA. In that case, you will get a deduction for VRS expense. As a company, can you tell your employees to retire and pay them some VRS? Yes. From the year of payment, you will get the deduction in again 5 parts. 35E is extract. Again, here you're in the business of prospecting and development of certain minerals. Example, you take some earth, you take the license from the government, you dig the earth, and you extract some minerals here. This is only for resident assessees. You get this deduction 35E. They say that whatever excavation expenses are from the year you start removing the minerals and 4 years prior to that, that means totally up to 5 years, whatever the expenses, we will give you a deduction. So this is basically expense incurred during the year of commercial production, and up to 4 years immediately preceding that year, you will get a deduction 1/10 over the years. So they will give you, because that is a big expense, so they spread it over to 10 years, and whatever is left after 10 years, of course, will lapse. So example, on this digging, etc., you spend totally 6 crore rupees. Then every year you will get a deduction of 60 lakhs. Let's say this year my profit was only 50 lakh, then I can only minus 50 lakh. The 10 lakh will be carried forward. So next year I can take a deduction of 70 lakhs. And this no deduction for acquisition of the site. It's not for acquiring the site. It's not for acquiring the capital asset. It's for digging that work for that, not buying any capital asset as well. Then these are some other deductions like paying insurance premium for your business, paying bonus and commission to your employees, paying interest on loans, of course, except interest on income tax, that is not allowed as a deduction, discount on zero coupon bonds. Basically, what I'm trying to tell you is all these expenses are small expenses. You will get a deduction for all of these as long as they are connected to your business. Next, contribution to provident fund, gratuity fund of your employees. If you are contributing, then you can contribute till up till John. What is John? That is return filing due date, July, October, November, and you will still get the deduction. But if it's your employees' money and you are paying it, example, you have a salary, you have an employee whose salary is 1 lakh rupees. Hear this example well. You pay him 90,000 rupees. What about the 10,000? The 10,000 is his money. You are supposed to pay to his provident fund. If you pay within the monthly due date, then you will get a deduction. Otherwise, you will not get a deduction here. For NPS also same. For gratuity fund also same. You basically have to make sure that if it's your money, pay by John. If it's your employee's money, then pay by due date to get the deduction. Next, for bad debts, you will get a deduction, but no provision for bad debts, only actual bad debts. Example, if let's say a customer has said that he will not be able to pay me 1 lakh, it's an actual bad debt, I can minus it. If it is any recovery, then I will take it under PGBP again as bad debt recovery. But remember, if I wanted a deduction of 1 lakh, but the income tax only allowed me, officer only allowed me a deduction of 70,000, that means he's already taxed me on 30,000. So any recovery up to 30,000 then will not be taxed again. Okay, new thing. This is section 36(1)(7)(a). There are certain businesses where the government feels that bad debt chances are really high, especially those people who lend money, and hence the government has said, listen, for you guys, we will allow you to make a provision for bad and doubtful debt as follows. If you're an Indian bank or non-scheduled bank or cooperative bank, then 8.5% of the total income before this deduction. So you'll calculate the total income and 8.5% of that plus 10% of the average advances made by rural branches. So these two together, you can make a provision of that and take a deduction already. And if you're a foreign bank, NBFC, etc., then 5% of the total income. So here it is a bigger, for Indian banks, is a bigger provision you can make. Example, here the provision that you make totals up to 1 crore, then the government will give you a deduction of their 1 crore and you can make a provision. But any bad debt up to 1 crore, then again you will not get a deduction because you got the deduction already. If it's a primary, this is other than a primary agriculture credit society. So basically what they are trying to say is this rural advances is other than primary agriculture credit societies. This is the only provision that is allowed. Next, if you're in certain businesses called high, example, you are lending money for housing or for agriculture or for infrastructure, long-term finance, if you're lending, again, the chances that people might default, and hence the government says, listen, we might give you a deduction to create a special reserve. So if you're a financial corporation, housing finance corporation, other finance corporation, then the three amounts you have to calculate, and whichever is the lowest, you will get as a deduction. First, amount that you're transferring to special reserve. Example, let's say 10 lakh rupees. 20% of the profits, let's say this is 10 lakh and this is 12 lakh rupees, or 200%, that is 2 times of the paid up capital in reserve. So in that fund already, whatever is the paid up capital, sorry, in your books of accounts, whatever is the paid up capital in reserve, double it and minus it from the special reserve account, that gap, let's say that is 13 lakh. So 13 lakh, 12 lakh and 10 lakh, whichever is the lowest, is what you will get as a deduction. This basically, next is family planning expense. This one is available only to Indian companies. If you are donating money for family planning purposes, revenue expense 100% and capital expense, example, if you make a movie on movie stars and they're talking about small family, happy family, that deduction you will get in 5 parts. This is the concept here. Mark-to-market losses allowed as per ICDS. Only to certain entities, example securities companies, they get allowed mark-to-market losses as well. What is mark-to-market losses? Is basically when you do futures options transactions, you have mark-to-market losses. It's basically a value decreasing, so you can minus that in your business expense. Section 35(7) says that is there any other expense which you want to minus, you can minus it as long as it's connected to business, but it should not be personal, it should not be CSR, it should not be illegal or bad in law. Next, scheme and insurance. Scheme and insurance is generally taken for important people of your organization. If you take scheme and insurance and you pay that money, you can take a business deduction. Of course, the receipt also is always taxable. This is unlike any other life insurance. Abandoned feature films. If you have a feature film which is abandoned, unfortunately, you cannot continue with making that film, then that expense also you can minus. Yes. Next, if you're developing roads, highways on build, operate, transfer model. What is build, operate, transfer model? You're building it, you will operate it, and after a few years, then you will transfer it. Then in that case, no depreciation allowed as a deduction because you're not the owner. Whatever expense of running that business is will be allowed as a deduction to you. Next, disallowances under PGBP. There are certain expenses which are not allowed under PGBP, and these are here. The shortcut is, guys, poor politician pays cash UPI. I'll tell you the shortcut, what is the meaning, but right now, if you're giving an ad in Times of India, Bangalore Times, Mumbai Times, great. But if you're giving an ad in a political magazine or a political souvenir, then you will not get deduction. If you're making a payment to someone, please make sure you do deduct TDS during the year and pay it by John. If you do that, great. If you don't do that, then 30% will be disallowed, and the payment to someone outside India or to a non-resident, then 100% will be disallowed. Equalization levy now is not important, so we will not talk about it, but in case you're supposed to deduct equalization levy and you don't do that and don't pay the government, you will not get the deduction of that. For your employees, if you're giving them perquisites, example, you've given your employees motor car, house, etc., and on that perquisite income tax you are paying, of course income tax you will never get it as a deduction. 40B, important and some big change right now. Let's discuss that. You're a partnership firm, you're paying salary to the partners and you're paying interest to the partners. First, interest to the partners can be paid only up to 12% rate. That means up to 12%. More than that will be disallowed. And if you're paying salary to the partners, that depends on the profits of the partnership firm. If you have higher profits, you can pay higher salary. Example, profits up to 6 lakh rupees, 90%, and profits above 6 lakh, 60%. That is your limit. Up to that limit you can pay. But if that amount is very small, you can at least pay 3 lakh rupees to all the partners, even if you make any losses. In case of AOPBY, any salary or interest you pay to partners or the members will be completely disallowed. There is no limit there. 48(2). If you're paying something excessive to specified person, example, in my business, I'm paying salary to my spouse. I should have paid only 2 lakh. I'm paying 3 lakh rupees. The excess 1 lakh will be disallowed. Next, 40. And who are specified persons, your relatives and people who have substantial interest or in which you have substantial interest. Next, 48(3) and 48(3)(a). If you're paying someone in cash as a businessman more than 10,000 per person per day, of course to a GTA up to 35,000, that is a limit, then in that case you will not get deduction. But what if you've taken the deduction on accrual basis and then you are paying, again that reversal you will have to do if you are making a payment, except A, B, C, D, E, F. There are some exceptions here. There is a rule 6DD which says that if you are paying to an agriculturalist, if you are paying to someone who does not have banking facility, to a cottage industry, you can see the shortcut here. But these are some cases where you will be allowed a deduction even if it's paid in cash more than 10,000. Gratuity, you will get a deduction, but not on provision basis. Mark-to-market loss, you will get a deduction. Deemed income. If there's an indirect income, example, if you bought that asset, scientific research asset, and you sold it, that deemed income. Bad debt recovery is deemed income. So these are some deemed incomes you can keep in mind. Special provision for deduction in case of business of prospecting of mineral oils. If you're prospecting mineral oil and then there are some deductions here, you can read it. Basically, they're saying that if there is some certain expenses where you abort you're not getting the minerals. Example, you thought that there will be minerals, you started digging it, but you did not get it. Then that deduction you can still get. I will read it here. Contract or agreement entered into by the central government for prospective extraction or production of mineral oils. Allowable expenses include ADD, expenditure of abortive exploration expenses, those expenses which ultimately did not realize in any minerals. After the beginning of commercial production, the expenditure incurred on the SSC, whether before or such commercial production, for drilling exploration for this activity, and to depletion of mineral oil in the mining area. These expenses you will get a deduction, but this is only and only if you have an agreement with the government. Changes in the foreign exchange rates. If you bought an asset, which when you bought the asset, the rate of dollars was 80, now it's 90, so 10 extra. So that extra will have to be adjusted in the cost of the asset. Taxation of foreign exchange fluctuation. We've already discussed this in ICDS 43B. Very important. These 5 expenses will be allowed to you as a deduction, but only and only on payment basis. So there are 5 expenses called merit. That's a shortcut where even if you're following accrual system of accounting, these deductions will be given to you only and only if you pay. So they basically are these 5 expenses. First, if you're making a payment to an MSME, we'll talk about in detail about MSME. But when do I need to pay? By John. For most MSMEs as an exception, we'll talk about it. If you're paying to your employees BPL bonus, to their provident fund, NPS, etc., and L is for leave salary, then you please pay, only then you'll get a deduction. If you're paying to the railways, if you're paying interest to banks, financial institutions, NBFCs, and if you're paying any tax to the government, then these deductions, of course, income tax, you never get a deduction, but other taxes like GST, municipal tax, all these you will get a deduction only when paid. Let's talk about MSME. Micro, small, medium enterprise. Micro means very, very chotu. Small is slightly bigger, medium is bigger than that. So we're talking about micro and small. The government said, listen, to micro and small, you please pay within 45 days or as per the written agreement, whichever is lower. The written agreement says 40 days, 40 days, 30 days, 30 days. For 50 days, no, not more than 45 days. So you have to pay them on time. And if there is no written agreement, then you have to pay them within 15 days. Else you will not get the deduction this year. You will get it in the year of payment. This is section 43B. And remember 2 things. One, electricity expense is not a tax, so you can take it as an accrual basis. And if you convert a bank interest into another loan, you will not get deduction because you have not paid anything. So the idea is you should pay. Only when you pay, you will get the deduction. What is a micro enterprise? What is a small enterprise? Here it is. Just multiply it by 10. 2.5 for micro, small becomes 25, 10 is here, and this becomes 100. Section 43C, special provision for computation of cost of acquisition of certain assets. You can just read it here. In case of amalgamation, not very important. 43CA, important. Whenever you're selling an asset, example land and building, if I'm Prestige Builders, Lodas Builders, and I'm selling an apartment, the government will say that, listen, whatever you're selling it at our stamp duty value, we'll take whichever is higher, because people can lie. But here, whatever sale consideration is plus 10% margin will be allowed. Example, if Lodha Builders is selling an apartment of 60 lakh rupees plus 10%, 66 lakh rupees. If the stamp duty value is up to 66 lakh rupees, no problem. Otherwise, we'll have to take the stamp duty value if it's higher than 66 lakh rupees. These are some examples. You can have a look at that. And income from construction service contracts already discussed in ICDS. 44A, arrange accounts. Who needs to arrange their accounts will never be asked in the exam. But generally, a certain businessman who's doing a certain turnover above, a certain turnover of profit above a certain limit will have to arrange their accounts and keep them safely for the next 6 years. Audit the books, very important. Who needs to audit the books? Section 44AB. Guys, if you're a big fish, that means if you're as a professional, your turnover is more than 50 lakh. And for certain professionals, more than 75 lakh. What is more than 75 lakh? If your cash transactions are less, then the government gives you a higher limit of 75 lakh. Only if you cross these 50 lakh and 75 lakh limit, then you have to go to a CA and get your accounts audited. That is, these people are big fish. For businessmen, the limit is 1 crore and 10 crore. Again, for 10 crore, the cash transaction should be low. Now, let's talk about 75 lakh and 10 crore. These higher limits you will get only if your cash payments divided by total payments is up to 5% and your cash received divided by total receipt is also up to 5%. That means the government is telling you that if your cash transactions are low, both payment and receipt, then we will give you a higher limit up to which you don't have to go to a CA. Only above that you will have to go to a CA for an audit. If you're an audit assessee, then you will have to file your return in October or November. Next, presumptive taxation. 44AD, ADA and AE. This is presumptive taxation. In 44AD, assume deductions. If as a businessman, you have to pay tax, you can tell the government your turnover and you can assume the profits at 8%. And in case the money is received in the bank account, then up to 6% only. This is great. You don't have to do any calculation. This is called presumptive or assuming the profits. In here, PGBP, no further deductions will be given. Of course, you can set off losses, etc. You can show higher profits. That's never a problem because higher profits will lead to higher tax. But if you want to show lower than 6 and 8%, then you'll have have to audit the books and arrange the accounts. The best part about presumptive taxation is you don't need to arrange your accounts, you don't need to go for audit, and you can show fixed profits. But it's not for everyone. 44AD is only for people who are residents, right? Residents, individual HUF partnership firm, not even LLP, and your turnover should be up to 2 crore. It can be up to 3 crore also if your cash transactions are low. Next, 44ADA again is for people who are resident, individual, not HF, only partnership firm, individual and partnership firm. And again, your turnover should be up to 50 lakh rupees. And 44A is for everyone, but is for a GTA. But these GTAs should have only up to 10 goods carriages. That means small GTAs. The entire presumptive taxation is for people who are smaller businessmen, smaller professionals, and smaller GTA. For GTA, every truck that you own should give you a profit of 7,500. That is an assumption per month or even part of the month. What is part of the month? If 9th of February you buy a truck, then February and March, 2 months will be calculated. So even if part of the month you have the truck, then you will have to basically calculate it. Here it is on ownership, it is not on put to use. Example, if I bought the truck today, but I put it to use in March, no. Then whenever you bought it, that will be considered put to use. As a concept is only in case of depreciation. If it's a heavy vehicle, what do you mean by heavy vehicle? More than 12 tons. Example, 13 ton truck if I have, then 13 ton per into 1000. So 1000 per ton, that is 13,000 will be the assumption of profit in case of heavy vehicles. Common points here, composition, income, we've already discussed. Case laws. Let's come to the case laws. We'll start with the 2022 Supreme Court case laws, Apex Laboratories. Basically, it's a lab or laboratory, it makes pharmaceutical products. It gave some incentives or some freebies to doctors. That is not allowed as a deduction because that is considered bad in law. Venus Records and Tapes Private Limited. This is a 2015 High Court case law. They had abandoned feature film. Guys, can the cost be minus? Yes, the cost can be minus because they're in the business of making feature film only. This feature film is abandoned, then no future benefit, and hence it can be taken as a revenue expense. Frontier Information Tech 2008, very old case law, so we can read it. It's not very important. Chennai Properties. These three are very, very important. If I am renting out property and it's my business of renting out property, then it will be taxed under PGBP. Yes, except one amendment happened. If it's a residential house property and you have business of renting out residential property, then that will still continue under income from house property only. What is the logic? The government says I don't want to give you more than 30% more than that deduction. So that is a one amendment. Key and Company, they had some margin money deposited. Example, guys, when you go for an IPO, etc., you need to deposit some margin money. On that margin money, you have interest income that will also go under PGBP. Yes, because it's connected to your business. ICDS. This is not the ICDS we talk about. This is a company called ICDS Limited. They had some leased vehicles. On that, can you take depreciation? Yes, financial lease means you're the owner. You can take depreciation. BSES Yamuna Power is not important. Again, guys, they had some EPBX and mobile phones. Can they be treated as computers? No, EPBX and mobile phones are not. EPBX is basically a fax machine, not important. But mobile phones, you can only take 15% depreciation. They are not computers. Seabros Hotels Private Limited, they have basically a 35 AD deduction they wanted to claim, but they did not get the approval, 3-star category, etc. Doesn't matter. As long as you're running the hotel and you got the approval later on, you can still take the deduction. Berger Paints, very, very important. Guys, here there is a concept of share premium. Example, I have a share of 100. If I issued at 120, then the 20 rupees will be considered a share premium. Can that share premium be included in the calculation of capital for that 35D preliminary expense? They said no, this cannot be taken. The assessee is not entitled to claim that as part of the capital employed. Sheshun Chemicals and Drugs. Here there is a bonus to be paid to the employees. Remember, bonus is part of merit, employees expenses bonus. You will get a deduction only when you pay. So what they did is they transferred that money to a trust and the trust paid the employees. As long as the employees got paid before John, you will still get a deduction. Yes. Why did they do that? Because Sheshun Chemical had some fight with the employees union. Next, Oriental Ceramics Limited, not very important. They had some glow signboards. On the Panwala shop, you see glow signboards, etc. Can that be taken as an expense? Yes. Can it be taken as a revenue expense? Sorry. Next, ITC Hotels, expenditure on issue and collection of convertible debentures. When you issue debentures, etc., that expense can be considered as a revenue expense. Yes, it can be considered. Again, it's considered because it's part of a business expense. Priya Village Roadshow, not important. National Cooperative Development Corporation is important. Now, it doesn't matter from where you are earning the money to take the deduction. No, doesn't matter. Example, if I'm earning money from my house property income, but I'm spending it for PGBP, as long as I'm spending it for a business purpose, I can take a deduction. No problem with that. CapScan Diagnostic is similar to that Apex Laboratories. Shanti Bhushan is not important. Nilavati, again, very old, not important. If you pay some police people or gundas to keep away, all this is illegal expense, not allowed as a deduction. Millennia Development Regularization, any violation, guys, is not allowed as a deduction. Guys, by the way, if I pay some GST penalty, not allowed as a deduction. GST interest allowed as a deduction. And Maruti Suzuki, you are making a payment to a non-resident where you are not supposed to deduct TDS, then what is the point? Then the full amount will be allowed as a deduction. Great City Manufacturing, very important. Guys, if you're paying partner's salary up to a certain limit, it's allowed, right? Up to 6 lakh 90% and above 6 lakh, up to 6 lakh and above 6 lakh, etc. Then in that case, if it's that limit, can the government say that this is excessive? No, you cannot say this is excessive payment, because there's a specific provision under section 48(2). Yamaha Motors Private Limited, can the assessee claim depreciation on discarded assets? What do you mean by discarded assets? Example, let's say there's a computer which I don't use every day. I've kept it on the side in my office. Can I continue to take depreciation? Yes, you can. As long as it had been put to use, till you don't sell the asset, it will be a part of your block and you can claim depreciation. Mahindra and Mahindra, there was a waiver of a loan. They had taken a loan and it was waived off. That means you don't have to pay the bank anything more. It will be a deemed income? No, because the loan is never an income, and hence waiver of loan is also never an income. And the para tools, debenture issued with maturity are very important, guys. You issued some debentures for 5 years maturity, but you paid them the interest in the first year. Can you take a deduction? Yes, as long as it is an expense which has been paid, which is liabilities there, you paid it off, etc. Then you definitely can take the deduction in this year itself. Guys, this is a revision video on a chapter called PGBP. Very, very important. Keep in mind the ICDSs. Anything else, reach out to me and I shall answer those doubts on the Telegram groups. All the best. See you in the next video.